All right, so have you ever come across those stories that just totally pull you in? They feel like you're reading a financial thriller, like where someone you think is untouchable builds this huge empire and then boom, it all comes crashing down.
Yeah, those are definitely page turners.
Totally. And that's exactly what we're going to dive into today, the whole saga of René Benko and how his $30 billion real estate empire, Signa, just totally imploded.
That's a wild one.
Yeah, I mean, talk about a dramatic fall from grace, right? It's got everything. Ambition, alleged deception. I mean, if you're into investigative journalism and high-stakes finance, well, this story has got it all.
It's certainly a head shaker. I mean, when you think about the scale of Benko's operation, it's mind-boggling.
Right, like this isn't some small-time operation. We're talking instantly recognizable landmarks, iconic properties.
Yeah. You've got Berlin's Cadui, that massive department store, a chunk of the Chrysler Building in New York, even Selfridges in London.
And then beyond those, trophy assets, there were these sprawling development projects all over the place. Germany, Austria, Switzerland. I mean, the guy had his fingers in a lot of pies.
The ambition was certainly there, like that Elb Tower project in Hamburg, aiming to be this defining part of the skyline.
Oh, and that luxury shopping district he envisioned for Munich's Old Academy. You have to admit the guy had a vision.
Definitely ambitious.
Yeah, and that's kind of what we're going to unpack today. This incredible rise, and even more, the way it all came crashing down. We'll dig into the financial side of things, those intricate maneuvers, the whole web of allegations, and just how this collapse is rippling through, like, the investors and the economy in general.
It's going to be a fascinating deep dive.
Yeah, and we'll make sure it's clear, too. We don't want to get bogged down in all the technical stuff.
Right. A clear and thorough understanding. That's the goal.
Exactly. So to start off, let's rewind a bit. Benko's story, I mean, it starts in Innsbruck back in 1977. Pretty modest beginnings, right?
Yeah, his dad was a municipal official, and his mom was a kindergarten teacher. Not exactly the background you'd picture for a real estate tycoon.
You'd think so, right? But interestingly, his first love wasn't exactly finance.
No, it was rock climbing. Apparently, he was pretty good. Even competed at a youth world championship level.
Talk about a change of pace. From scaling cliffs to scaling the world of business. But even early on, that entrepreneurial spirit was there.
Yeah, before he even hit 20, he managed to pull off his first big business deal.
It was shares in the Lanzerhof Wellness Hotel. Made a pretty good profit, too, from what I've read.
The sources say it was substantial.
And then, well, this is where that classic element of connections comes in. You know how they say it's not just what you know, but who you know?
Oh, yeah. Networking can be everything.
Absolutely. So picture this. Benko is at an apartment viewing, totally random, and he meets Karl Kovarik.
The heir to the Stroh gas station fortune. Talk about being in the right place at the right time.
And Kovarik, well, he becomes Benko's first major investor, pouring a significant amount, we're talking millions, into his first company.
Imofina.
Yeah.
Later, that would morph into Signa.
Right. And, that initial investment, it really was key. It kind of highlights this pattern in Benko's whole journey, the ability to spot wealthy individuals and get them on board.
Persuasive, for sure.
Yeah.
And then, well, things just started taking off. You had this period of rapid expansion, and a lot of it was driven by what became known as the Benko factor.
The Benko factor, huh? What's that all about?
Well, it seemed like municipalities were practically throwing prime real estate at Signa for these huge development projects. And then, almost like magic, the value of these properties would just skyrocket once Signa got involved.
Almost like he had this Midas touch, making things turn to gold.
At least on paper, yeah. It didn't matter if it's the Elb Tower or the Old Academy. There was this perception that Signa's involvement meant instant appreciation.
So this Benko factor, it was a core part of his whole business model.
It seems so. It wasn't just about making money from rent. It was more about acquiring these high-end properties, doing some redevelopment to pump up the value, and then using that inflated value to get more financing for even more projects.
Okay, so it was a cycle, but one that totally depended on property values going up, 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 and of course those low interest rates we had for so long.
Absolutely, and that's where things get a little shaky.
Mm-hmm.
The sources point out this big gap between those paper profits, from the valuations, and the actual income coming in from rent.
Meaning?
Well, sometimes the payouts to investors were actually more than the rental income the properties were bringing in.
Whoa, that's a bit of a red flag, isn't it?
Yeah, for anyone looking at the financials, it suggests that the whole thing was relying on this constant growth in asset values, not on actual sustainable income.
Okay, so let's break this down a bit more.
Right.
It sounds like there was some serious financial engineering going on. And speaking of complicated maneuvers, the structure of the Signa Group itself was, well, deliberately complex.
Oh, yeah. A whole tangle of companies, subsidiaries, trusts, hundreds of them. One source even mentioned a draft organizational chart that took up 46 A3 pages.
46 pages. That's ridiculous.
It was a nightmare for anyone trying to do due diligence to really grasp the financial health of the whole thing.
So basically, it was a way to obscure things, make it difficult to see what was really going on.
And that wasn't all.
Yeah.
You also had this network of private foundations in Austria and Liechtenstein
What were those for?
holding assets. You had the family Benko Privatstiftung, the Laura Privatstiftung in Austria, and then the INGBE Foundation and the Air Ual Foundation in Liechtenstein. They provided this extra layer of, well, secrecy. It was hard to tell who ultimately owned what and where the money was flowing.
It sounds like peeling an onion, with each layer designed to hide what's underneath.
Exactly. And there were accusations that this whole setup was specifically created to avoid legal requirements for consolidated financial reporting.
So even more ways to make things murky and hard to understand from the outside.
It certainly raises a lot of questions.
And all of this wasn't exactly happening under the radar. You know, even as Benko's empire was booming, there were those who had their doubts.
Oh, yeah. The financial regulators were getting nervous. As early as 2019, the Austrian Financial Market Authority, the FMA, expressed concerns about how exposed banks were to Signa's debt.
So basically, they were worried that if Signa went down, it could take a bunch of banks with it.
And those concerns only grew over time. Banking regulators and the ECB started scrutinizing Signa's activities more closely.
Wait, the ECB, like the big guys stepped in.
Yeah, they even did a special audit specifically focused on loans banks had made to Signa. That's a pretty big deal.
Wow, that's not a good sign, especially from the ECB. It's almost like they were singling Benko out.
And that wasn't the only red flag. There were delays in publishing the annual financial statements for key parts of the group, like Signa Prime and Signa Holding. That kind of lack of transparency always raises eyebrows.
Like they had something to hide.
It certainly seemed that way. And all of this was happening just as interest rates started to go up and the real estate market began cooling down. Remember how that was key to the whole bank-a-go factor?
Yeah, things weren't looking so good for his model anymore.
Right. Those low interest rates had been fuel for his expansion. But as they rose, the cost of financing new projects and even just paying the interest on existing debt became a huge burden.
A recipe for disaster, really.
Definitely a major factor in the eventual collapse.
Okay, now let's switch gears a bit. We've talked about the financial maneuvering, but there's this whole other side to this story that's just as fascinating, maybe even more so. We're talking about politics, power, and allegations of some pretty shady dealings.
The world of influence and connections, it's a key part of the story, and for anyone interested in investigative journalism, it's a goldmine.
Absolutely. And some of the names that pop up are, well, pretty high profile. Benko cultivated relationships with some powerful figures in Austrian politics. I mean, we're talking former Chancellor Sebastian Kurz and Alfred Gusenbauer.
Not just small talk at cocktail parties either. There were some substantial financial ties. For instance, Gusenbauer reportedly received 12 million euros in consulting fees from Signa, all related to the Galeria Karstadt Kaufhof bankruptcies.
12 million for consulting. That's a lot of consulting.
And there's an interesting detail here. Those initial invoices he submitted, apparently they had some pretty basic errors in them. Makes you wonder what that consulting really involved, doesn't it?
Definitely raises some eyebrows. And then you've got Kurz. His alleged involvement is equally intriguing, especially for those who follow the world of political influence. He's said to have helped arrange financing for Signa from the Middle East, and one report even claimed he was promised a big chunk of future earnings.
They called it his first few hundred million euros. If true, that's a pretty cozy relationship between a former chancellor and a real estate mogul.
Yeah, and it gets even more complicated because these connections, they aren't the only red flags when it comes to Benko's ethics. He has a past conviction back in 2013 for trying to bribe Italian officials in a tax case.
Not exactly a clean slate for someone controlling such a vast business empire.
And those legal troubles didn't stop there. There are active investigations into more allegations of bribery and corruption.
Including accusations that he offered a top job in the Ministry of Finance in exchange for getting favorable tax treatment? That's a pretty bold move.
And they actually raided Signa's headquarters as part of this anti-corruption probe. That tells you how seriously they're taking these accusations.
And there's more. There are allegations that he bribed a politician named Christoph Schorher with donations, all to get favorable treatment for his projects in Vienna. Investigators even brought up Benko's 2012 conviction for attempted bribery when they were looking into the Schorher case.
Like they were saying, hey, this isn't just a one-time thing.
A judge in that earlier case even called it a classic case of corruption. So there's definitely a pattern of behavior that investigators were digging into.
It does make you wonder if he saw political influence as just another tool, another way to get what he wanted.
A means to an end.
Which brings us to another part of this whole saga, one that really generated a lot of controversy. The acquisition and eventual downfall of Galeria Karstadt Kaufhof, the big German department store chain. Signa took it over in 2014, and things went downhill pretty fast.
Yeah, multiple bankruptcies, constant requests for government bailouts. It was a mess.
And what really rubbed people the wrong way was that Benko was asking for hundreds of millions in taxpayer money, while at the same time, his real estate division was making a profit.
There were accusations that he deliberately ran the department stores into the ground so he could profit from the valuable real estate they sat on. One German newspaper even called it a dirty game.
And the timing of some of the financial moves is definitely suspicious. Right after Galeria Karstadt Kaufhof got those state aid packages, a Benko entity called Galeria Properties distributed 450 million euros in profits.
For 150 million. That definitely raised eyebrows. People started asking who's really benefiting from this bailout, the struggling employees or Benko and his company.
Yeah, it looks pretty bad. And then he went back and asked for more state aid, even though he'd already gotten a ton of money.
Retail experts even called the whole thing a scandal, saying they doubted the loans would ever be repaid. They pointed to the dire situation of the department stores under Signa's management.
So it all seems pretty shady, right? And then, as we all know, the house of cards came tumbling down.
That perfect storm hit. Interest rates rising, construction costs soaring, the real estate market cooling off. It was the end of the line for Benko's strategy.
All those things that had worked in his favor, they turned against him.
It seems that way. And then the Austrian Economic and Corruption Prosecutor's Office raided Signa's headquarters in October 2022. That was a major turning point.
Yeah, it was like they were finally saying, enough is enough, we're coming for you.
After that raid, Signa's bonds plummeted. Banks started demanding their money back. Benko's access to capital, the thing that had fueled his whole empire, it dried up.
And the dominoes started falling.
One after the other. Signa Holding filed for insolvency. Then Signa Prime, Signa Development, all the major parts of his empire.
Those flagship projects like the Elbe Tower, they just stopped, became these monuments to the collapse.
Even the office furniture and the company's wine collection, they were put up for auction. It was a fire sale.
Talk about a dramatic downfall. And as the insolvency proceedings started, the focus shifted to Benko's personal wealth and all those allegations of asset transfers.
Right. There were claims that he'd moved a lot of assets away from Signa Holding before it went bust, possibly to avoid creditors.
And there's this deal that really stands out. The INGBE Foundation, remember that one from Liechtenstein? They sold this luxurious villa on Lake Garda, Villa Eden, to Signa Holding right before the bankruptcy.
In exchange for what's been called a worthless stock package, that stinks of trying to hide assets, doesn't it?
And the spotlight also landed on those private foundations, especially the Laura Private Foundation. They allegedly held all sorts of valuable stuff, a luxury chalet, a private jet, a yacht.
It's quite a contrast to what Benko himself claimed in his personal bankruptcy filings. He said he had very limited personal assets and was even financially dependent on his mother.
But then he sold the yacht, the Roma, and the private jet, a Bombardier Global Express. Makes you wonder what's really going on there.
There are even allegations that he embezzled tens of millions of euros. And the tax authorities are looking into his past use of a private jet to reduce his tax bill.
So it's a tangled web, and at the end of it all, it's the investors and lenders who are left holding the bag.
Yeah. People like Klaus-Michael Kühne, Torsten Toller, big international funds from Saudi Arabia and Abu Dhabi. They're all facing huge losses. Billions of euros have gone up in smoke.
And the insolvency administrators are saying that creditors might only get back a tiny fraction of their investment.
And the banks, especially the German Landesbanken and those in Austria, they're on the hook for billions in loans.
It's a reminder that even when you're dealing with big names and seemingly successful empires, there's always risk, especially when things are as opaque and complicated as they were with Signa.
And the whole thing really highlights the importance of due diligence, understanding who you're dealing with and what their track record is.
Right. And speaking of Benko's track record, the sources paint a pretty interesting picture of his style. He was known as this charismatic guy, a real smooth talker, someone who could convince wealthy people to buy into his grand vision.
And he lived the high life, too. It was part of the image, a way to impress potential investors. The whole fake it till you make it philosophy, as one source put it.
And it worked for a while.
But it was all built on a shaky foundation. Benko exploited people's trust, that idea of the honorable merchant. He downplayed risks and presented different versions of the truth to different people. And even as things were falling apart, he was still scrambling for money, trying to sell off assets to stay afloat.
So what's the takeaway here? For our listeners, those who are fascinated by these kinds of stories, by the world of high finance and investigative journalism.
But I think it's a cautionary tale. Benko's rise was meteoric, but it was built on debt, on ever-increasing property values, on this incredibly complex and opaque structure. And it was all amplified by his political connections.
And the collapse was just as dramatic. It shows what can happen when ambition goes unchecked, when transparency is lacking, and when you bet everything on a market that can turn on a dime.
It's a story about the dangers of leverage, of overconfidence, and of the allure of easy money.
And the story isn't over yet. The investigations are still ongoing, and it's going to take years to unravel this whole mess.
The impact on investors, lenders, the whole real estate market, it's still unfolding.
So here's something to ponder. What does all of this tell us about the relationship between wealth, power, and accountability, especially in the world of big money? What lessons can we learn from Benko's rise and fall?
It's a question worth thinking about. For investors, regulators, and anyone who follows these kinds of stories, there's a lot to unpack here.
And if you're intrigued, I encourage you to dig deeper, look into the sources, follow the developments. There's a lot more to this story than what we've been able to cover today. It's a real-life financial thriller still playing out.